We decided to summarize everything and make it simple. In this video, I will break down all the annual procedures, services, and typical costs you need to keep your Hong Kong company active and compliant. You will see the full cycle, so nothing will surprise you. Your Hong Kong company follows a simple routine every year. First, you renew your business registration, BR. Your BR is the company's official ID in Hong Kong. You renew it every year, usually right around your company's incorporation anniversary. It is quick, about a week, and your secretary or service provider can handle it by paying the government fees and collecting the new certificate. Almost at the same period, you file the annual return. The annual return is the form NAR1. It confirms who owns and manages your company, your directors, shareholders, company secretary, and registered address. We will explain the role of the secretary and registered address later in this video. Your secretary usually needs only a short confirmation that no ownership changes happened and the annual fee. If something changed, for example, a new shareholder or director, the secretary will update the company's registry records and then file for the new annual return. The deadline for this one is 42 days after your incorporation anniversary, but in practice, this step is usually done together with your BR renewal. Banks and payment providers often ask for the latest BR and NAR1 to confirm the company is active and to verify the ownership and management structure. Step 3. Bookkeeping and accounting. After your financial year ends, you give your bank statements and your documents to your accountants to prepare financial statements. There is no fixed timing for that, but there is a deadline for submitting future PTR, which requires your financial statements. We will cover PTR in a minute. For now, remember, accountants may ask extra questions or fix the first draft, so giving yourself time avoids last-minute stress. Step 4. The annual audit. In Hong Kong, all active companies must do an audit. The only exception is dormant status. It is when your company has no transactions. You can apply for that, but this we will cover in future videos. Annual audit step is sequential. It starts only after the books are ready. Your accountants send the statement to a Hong Kong CPA, Certified Public Accountant. CPA reviews them and issues audited financial statements. The audit package usually goes to the tax office together with profit tax return, PTR, our next step. But sometimes CPAs pre-file the audit before this PTR is issued. This is normal practice. Banks sometimes request the latest audited statements to keep your corporate accounts active. Step 5. Profit tax return, or PTR. The first PTR comes within 18 months after incorporation, and then it comes annually based on your financial year. For most companies with December to March year end, the PTR arrives in spring. After you receive it, you normally have 1 month to file it with the audited statements. Your accountants can apply for an extension for up to 3 months, which is standard for most companies. In other words, first year, file PTR and audit roughly 6 to 9 months after your first anniversary. Following years, usually 3 to 5 months after your year end. Step 6. Paying your profit tax. Once the profits tax return and audit are filed, the tax office reviews your case and sends you the Notice of Assessment, NOA. This is your official tax bill. If you have back tax to pay, the payment deadline is usually within 1 to 2 months later. If your company has offshore status or loss, you get a nil notice confirming compliance. The next 3 steps are done only in special situation. If it's not your case, you can skip it. Step 7. Property tax return, if applicable. As we mentioned in the previous videos, if your company owns local real estate in Hong Kong and rents it out, you need to pay a property tax. You submit your property tax return at about the same time as profits tax return. If your company has no property in Hong Kong, you can skip this step completely. Step 8. Employer filings and staff obligations, if applicable. If your company hires employees in Hong Kong, there are a couple of extra annual steps. the employer's return, IR56B, filed with the tax office by the end of April each year. The IR56A form is the annual summary for all employees, and there are 3 forms. The same number and E, F, G are filed whenever an employee is hired, terminated, or leaves Hong Kong. MPF contributions, the mandatory provident fund, are paid monthly, and the annual summary goes together with your employer's return in April. Again, if your team is fully remote and outside Hong Kong, you can skip this step entirely. Step 9. Annual license renewals, if applicable. If your business is regulated, we talked about this in part 2 of this series, you renew your licenses annually. Licenses usually have an expiration date, so you renew them 1-2 months in advance. Most companies, including consulting or trading, do not have this step. And finally, dividends. Actually, you don't have to wait until the PTR is filed to distribute profit. Once the financial year is closed and your accountants confirm there is a real profit in your financial statement, the board can sign a simple resolution and transfer the money to the shareholders. But banks may prefer to see audited profits before large dividend payments. Smaller amounts are usually fine. These steps may seem complicated at first sight, but in practice it is straightforward because almost everyone uses service providers just who consolidate everything for you. Some of these services are mandatory because they keep your Hong Kong company alive and in good standing. Others are optional, but they make your life easier, so you don't need to hire an in-house staff for occasional tasks. Let's break them down. First, company secretary. Every Hong Kong company must have a licensed company secretary. It is a professional role that keeps your statutory books, prepares board resolutions, and files any changes of directors, shareholders, or company details to the company's registry. Your secretary may also handle an official correspondence with the registry, so you don't miss important deadlines. Without an active company secretary, your company is technically non-compliant and can't file annual returns. Second, the registered address. Every company needs a registered office address in Hong Kong. This is the official address for government letters and is where your statutory books and significant controllers register are kept. Most foreign founders use a virtual office through their service providers. This works perfectly for industries that don't require a special license. Third, bookkeeping, audit, and filings. Even if your company has only a few transactions, you still keep invoices, contracts, and bank statements. This is the foundation for the future financial statements, audit, and filings we were talking about before. Fourth, additional services. Beyond the core services, some providers can handle a lot of practical extras that help your company operate globally. For example, documents and communication. Your provider can forward your mail, issue certificates like a certificate of good standing, and handle document legalization or apostille if you need to open accounts abroad. They sometimes provide legal support and can offer nominee services if your structure requires it, or banking and tax support. Good providers can handle tax questions, support your offshore claim, help to deal with banking compliance, KYC, and EDD checks. Some can act as business introducers when to open accounts in Hong Kong or abroad and advise how to keep these accounts safe and active. And there are those who provide business and strategic advisory. The best providers don't just handle paperwork. They can advise on your global structure, share the practical insight from running real business, and help you plan your next steps with confidence. All of this is optional, but it allows your Hong Kong company to work globally without hiring in-house staff. That's why choosing the right service provider is critical, especially if you are a founder with a complex passport or your setup needs extra expertise. First, pick a team that truly understands what you will face. If they have opened accounts, passed KYC, and handled compliance as high-risk founders, they know the real solutions, not just theory. Second, choose providers who run real businesses, not only legal or accounting firms. Practical experience in trade and international operations means that they know how banks, MSOs, and tax offices react in real life. This combination, experience with sensitive cases plus real business background, is what can build a working, compliant, and trusted setup from day one. Providers without this experience often treat sensitive cases like standard ones, and that leads to costly mistakes, delays, and rejections. And as you may already feel from our other videos, our mission is to help international founders build real global businesses, especially those with sensitive and complex cases. So if that's your story, don't hesitate to reach us. We are here to help you. Final thoughts. Keeping a Hong Kong company active and compliant is much simpler than it first looks. Once you see the full cycle, it becomes predictable and easy to manage. The key is organization and the right service provider. Mandatory steps like BR renewal, NAR1, bookkeeping, and audit keep your company alive. Optional services like document handling, banking support, or tax and business advisory save your time and let you run your global business without in-house staff. In the next part, we will break down when and how to close a Hong Kong company, your options, and what happens if you get it wrong. Subscribe to stay updated, and let's keep going.